Diane's got some important notes for us this morning following on to yesterday's big rally in the semiconductors. Everything besides NVIDIA worked yesterday, Diane. It was a really interesting day for the chips, and I think this is one of the most important sectors today because Lam Research, AMAT, they all loved Taiwan semi earnings yesterday, and it made up for NVIDIA being down.
Yeah, indeed. And so you're seeing a lot of movement when it comes to analyst activity around these. By the way, I love that conversation with KG just now. So, all right, let's start out with Keybanc upgrading Lam Research and AMAT here. So they're boosting their price target. They're boosting their rating on Lam Research to overweight. Their new price target is $95 a share. For AMAT, they're boosting it to overweight with a price target of $225 a share. Essentially, what we're seeing is just that confidence in the long-term trajectory within the semiconductor space. So that is behind this. And then that view that the ongoing expansion in AI and AI-related devices will obviously benefit the Lam Research and Applied Materials trajectory. They talked about the cutting-edge semiconductor technologies, backside power delivery. They did talk about the recovery that we've seen in sentiment because you remember we saw some regression when it came to the share price of Lam Research, Applied Materials, those in that sector last year, starting around in the summer of last year. They talked about investor sentiment has been improving then, and just the projected path for returns are, showing those just signs of improvement in general. So that's why they're becoming just more constructive on them. They did acknowledge there are some potential difficulties. They can't necessarily call out when is the inflection point, but they do advise for just investors to position themselves for a long-term recovery. So again, boosted targets on Lam Research and AMAT, and we're seeing shares move higher off the back of that.
Wow. These are companies that have been pretty rocky at best for the last year. Weak would be the proper definition relative to their group and relative to the market. So this is maybe for the value trade enthusiasts who don't necessarily want to venture outside of tech or semis. It's not a bad option to kind of get a little bit of both worlds there.
Yeah, indeed. And I mean, they talked about them just positioning themselves with regard to the further innovation that we'll see within AI and then just next-gen chip design. So they see both AMAT and Lam Research, again, being a beneficiary of that. And to your point, they acknowledged that the short-term outlook or near-term may be a little bit cause for caution, but their long-term view is that there is room to run here and reason for optimism about these two plays.
All right. Lam looking interesting. We got to put that high on the list for Chartmaster because that's an interesting chart there. It seems like it's building up this kind of like coiled spring potential to maybe get up off the lows. Broadcom is another one with the price target hike. I mean, this one, yeah, a little bit more of a already fan favorite for many.
Yes, indeed. And they really essentially said as much in this note. So Barclays is boosting its price target for Broadcom to $260 a share. They're maintaining their overweight rating on it. This is part of their just overall view on 2025 in that sector for semis. They think that both 2025 for Broadcom and just in the space in general, that this will be a year, as they call it, of haves and have-nots. And we've seen that in terms of their AI preference. They like Broadcom in this space. They did note that they are not as constructive or not as positive on cyclical semis, analog PC. Not surprised to see that. They think that larger recoveries there will take longer. So this is a view for 2025 for Broadcom, and it seems like they're also constructive on them heading into 2026.
Okay. Nice looking chart from Broadcom. Kind of like it, the way it popped on the earnings and then just kind of chilled out after that. Kind of gives you a nice opportunity to consolidate, soak in the new valuation, soak in the new information. especially when the rest of the market was chopping and selling. Broadcom held in after a big earnings pop. It seems like it's got a lot of potential still if we do make this move, which markets are losing a little bit of their gumption, but not too much. There is some negativity out there. JB Hunt from last night, the transportation, some logistics got hit down 7%. George and I seem to conclude that it's basically just kind of a reflection of what we knew about manufacturing and more industrial themes. It's pretty soft.
Yeah, I mean, they missed on EPS. They did come in line on revenue, but again, it was a decline year over year on revenue. So adjusted EPS was $1.53 a share. The street was looking for $1.63. Revenue $3.15 billion. They talked about the higher expenses, and essentially it was the higher expensive along with this lower truck count that weighed on revenue. They said, quote, repositioning costs related to network imbalances in addition to driver hiring and onboarding expenses were elevated in the quarter. This is their quote, to support customers' peak season demand. So obviously they try to position it in a positive way, but on their earnings call, they did talk about having to optimize more, and the translation of that means they'll have to do some cost cutting.
All right, so they're going to have to pressure some of the already pressured financials in the business. So, all right, not a great report, pretty stock specific though. What about in the airlines, Diane? A few of those got hit in the last couple days, but they did have a big run. I know there's a note out this morning that was somewhat negative, but then there's also like a positive note, right?
There is some positive within this. This is B of A out with their outlook with regard to some of the airlines. So they're looking at both American Airlines, Southwest, and JetBlue. For American, they favor that more. They've boosted their view. They've upgraded American to neutral from underperform. Their new price target is $20 a share. They talked about the earnings that we got from Delta, and you and I dug through that before. Delta talked about those premium pricing and premium being very solid. They think that American will benefit from that trend. The build back of corporate travel, Delta talked about that as well, and growth on Atlantic routes. So that's why they're more constructive on American Airlines. But they've downgraded their view on Southwest and JetBlue, downgraded Southwest to underperform. They previously saw it as neutral. They have a price target of $31 a share. With both Southwest and JetBlue, those trends that they talked about benefiting American, they don't think that Southwest and JetBlue will benefit from those industry trends. And they also see, in terms of their valuation, they argue that they're at the high end of those ranges. And so combined with that less exposure to the premium, obviously those are budget airliners, so they're not having the same, they won't have the same growth path that we heard from Delta, is their view on that. But you could see that for those. I mean, it's, the opportunity to do the premium prices is more big. It's bigger with the bigger airliners. For sure. Leverage. All right. It seems like the whole group is conceptually in good shape. But there are obviously some big differences airline to airline. American is kind of looking like one of the better charts right now. Delta also good too. United, but obviously Southwest has not been as good, and it kind of starts to go downhill from those big three. But the index too, just like the ETF play Jets, is pretty solid. Thanks, Diane. Very good stuff. Appreciate it very much. Thank you. Good walk through the analyst commentary this morning. Thanks, Diane.